Hello, Dave Knight here at Knight Capital Management. I want to thank you and welcome you once again to another video. We're looking at kind of recapping from this point to what we're going to talk about today. First, we introduced here the bar itself, the open notch, the close notch, the low of the market, and the high of the market. We then moved from looking at one bar to looking at a series of bars. In a series of bars, we could see that we could kind of start forming trends. We talked about the uptrend, and then obviously we also talked about the downtrend as well. And then after we talked about the uptrend and the downtrend, we actually took it a step further last time with showing you the green and the red bars. In the last time that we left off, we talked about the green for the uptrend, and how we were going to take the green and trade up, and we talked about the red and how we would trade that down. So this is where we left off at the end of our last session, or our last video. So now we're going to add back, we're actually going to add into our trades here. We're going to add in the moving average lines, and then we're also going to add in the spike reversals. So what I want to do is add the spikes in first. So let's take a look at the spike reversal moving on the upside. Now we see we have two on this chart from 11/30/2009 to look at. And what this basically means is that our low finally stopped going low, and then we went up and closed higher than the last low and the close of the other low, giving us a nice spike bar. And then this day we saw the spike bar here at 11:40, and then we saw another spike bar at 12. The second one being a little bit more stronger, and as we can see, perhaps being the opportunity, perhaps take a look at the long side here. Now this is kind of trying to catch a falling knife at times when you're trying to catch these spike bars, but we're going to talk about when in the future video of when a spike reversal bar would be a good time to get involved in it. But just so you understand right now, the spike reversal is trying to signify perhaps a change in the overall direction of the trend. So here's your trend going down, and our spike reversal triangle heading up, in this case going in an upward fashion through here, is signifying perhaps the movement is getting ready to turn. As you can see, as it relates to the second spike bar, it pretty much turned, although it took, kind of meandered around here, but then it did finally turn. So let's take a look at the other side of this, and that would be the downward spike bar. Okay, we have from November 30th, we actually have three. 1, 2, and the third one up here. Now, like these downward spike bar, upward spike bar, the downward spike bar is a bar that comes up, makes a new high, and then closes lower than the previous close. So it happened actually two times on the 30th of November. Once here at the 135 mark, or 1335, and you see the second one come over here at 2 o'clock, and then the third one, there was three, coming in at late in the day at 4 o'clock. I mean, really, you would ignore this late day movement right here, as the market was getting ready to close anyway. So if we look, pretty much we have two right here that are downward. In this case, you're looking to trade the downward spike bar lower, so we're thinking perhaps it's a downward movement. And then you see the spike bar on this side where you will be trading to the upside. So now we've kind of built the charts. We have our green bars going up, we have our red bars down, we have our spike bars here that could signify a change of direction of trade. The triangle facing up to go up, the triangle facing down to come down. And now let's add in one more layer here of our moving averages. Okay, so now we're looking at a moving average. I got rid of a lot of the other lines that were kind of would interfere with taking a look, and now you can actually see a smooth. The purpose of a moving average is to smooth the reaction of the bars and to give us kind of a movement of how the market was happening in one trading day. Now this is a quick moving average, and we talk about a moving average crossover. So one bar itself is really not going to help you. You can see perhaps there's an uptrend here, here's a downtrend, here to here to here, and then you see the break coming through here, so a breakout right through here. And you see the upward movement, perhaps a retracement here, and then finally an upward movement but you definitely see three good solid moves like we saw before. The uptrend here, the downtrend here, and then late in the day the uptrend up. The way to look at this a little bit further is actually add another moving average, so you kind of bring the crossover into effect. Okay, so now we see a crossover action going on, and a very simple trading method is to trade the crosses. As it crosses over, you want to get long. So here is an opportunity of a crossover to go long here. And when it comes back the other direction and crosses to this side, you want to go short. So your moving average crossover, now this is obviously a kind of a trending day here that we're looking at. Now we see some area here. We talked about trading ranges once again. This is the area that we talked about. Hey, this is maybe the time to stay away from. Now we see a trend channel forming here. This is the type of the opportunity that you don't find much opportunity. You see the markets moving back and forth. And obviously we talked about maybe this is the good time to stay away from the market, to SOH, to sit on your hands. And then we see a solid crossover, man, not so much, but all of a sudden now we see late in the day right here, you see this nice upward pattern, and you can see the velocity and the degree of the ascent here as well, making a very strong pattern. Just basically here's a failure. I'm giving you a little bit of profit, and here's a nice movement through here. So just keeping a look at the moving averages here, we can see that we had once again the opportunity to go long here, an opportunity to go short through here, and kind of the area to stay away from and through here. And late in the day you see the upward movement. Now the moving average helping you make some trading decisions on that moving average crossover. This is on our next video we're going to take a further look. We're going to add in some the 50-day MA. We're going to look at a 200-day MA, and we also have the CCI line to take a look at, and volume. So we're going to wrap this up in 2 more videos is what I'm looking at, in 2 to 3 more videos. Our next video we'll take a look at a couple more moving average lines, the 50-day MA and the 200-day MA, and we'll probably either look at volume or CCI within the next 1 or 2 trading videos from this point forward. This is Dave Knight here at Knight Capital Management. I wish you the best in your trades. Good trades, everyone. We'll talk to you a little bit later. Take care, everyone, and we'll see you soon. Bye now.